I tried to get my daughter to read Harry Potter back in the day, and she thought it was too scary. When I first met Charles, he said, "Have you read Power of Zero?" I said, "I know something about it." He's like, "You read it." I started reading it. I couldn't finish it because it was too scary. Right? The reality is that what I love how they put it in the book, they say that in our 401ks and in our IRAs, we have a business partner. That business partner is called the US government. And the US government decides what percentage of the business they get at any given time, and we have no vote in it. Super. Thank you so much. So where should I start? Anybody here that has kind of been around, that's been an investor, recognizes that the government has really kind of two levers to get us to do what they want or not do what they want. One is interest rates, and the other one is taxation. The government wants us to own our single-family homes, so what do they let us do with that mortgage interest? Deduct it from our income. The government does not want us to smoke cigarettes or drink gallon-sized Slurpees, so what do? They tax it. And the government gets us to go in certain directions using taxation. There's a big difference between tax avoidance and tax evasion. Tax evasion is breaking the law. Tax avoidance is going and looking at all of these rules that the US government has put forth and using those rules to minimize our tax liability. There is actually a Supreme Court justice, I forget his name, that basically said it is every American's duty to try and pay as little in taxes as possible within the law. What we do at Griffin Capital is we focus first and foremost on real estate, secondly on rental housing, and we use all of the tax goodies that the Internal Revenue Code provides to rental housing to help lower our individual tax liabilities. That's kind of the primer. So my name is Ron Fuchs. I am with a firm called Griffin Capital. Griffin has been around for 30 years. We have raised about $18 billion of equity through investors such as yourselves. Like I told you, we focus exclusively on the rental housing space. So what is rental housing? Rental housing can be a garden-style multifamily community, right, where there's a pool and a garden in the front. We don't have very much of those in the Northeast. It can be podium, where you have retail or you have parking at the bottom and then 6 to 8 stories on top. We see a lot of those. What's becoming more and more in trend is called build for rent. So for all those people that for one reason or another are still renting, but they don't want to be stacked on top of each other in an apartment building, you take a community, you build it, and you build 130 single family homes or townhomes for people that want a garage, a front yard. They want that single family home experience, but for one reason or another, they can't or have chosen not to become owners. And rental housing, and student housing. Why? Because we all need to put our heads in beds, right? Rental housing tends to be non-discretionary. It tends to be recession resilient. And we learned during COVID, we don't necessarily need office space. Amazon has taught us that retail is changing exponentially. When it comes to hotels and hospitalities, when the economy is doing great, we're all traveling for business, we're going to Airbnbs, we're going to hotels. But when we're not, we don't really need to. We can do our meetings in Zoom or Teams or whatever it is. Amazon basically controls the storage world. If you look at data centers, I'm pretty sure next week our president is going to disclose that the aliens are here, and the aliens will give us this new technology that puts 1 million square feet of data into like an orb, talking of Star Trek. So we like to focus on what we know and what we feel great about, and we feel great about rental housing. I'll talk a little bit more about that momentarily. So, rental housing. Anyone that's been following politics recently whether you're looking at the Democratic Socialists of America in New York City, or whether you're looking at Republican states that are talking about taking national land and turning it into affordable housing, we have a massive housing affordability crisis in this country. Why? There have been demographic shifts over the last 2 decades of people. I mean, we're the last ones, right? Staying up here in the Northeast. All our friends and loved ones are moving south, like in this slide over here, right? They're moving to those states that are warmer weather, lower taxation, for affordability, various reasons. And that has put a lot of stress on the demand for housing in those markets. COVID caused massive exodus from the big cities to suburbia, and there just wasn't enough housing in those markets. Post-COVID, when we're all doing our business with DocuSign and with Zoom, people that used to have to live in a big city because they had to be in the office 5 days a week, now we're saying, I work from home twice a week, so doing the commute into a big city 3 times a week isn't that bad. I want to live outside of a city, right? It's shifting trends. If you think of what the baby boomers did, from the hula hoop to the car to the single family home, you're now seeing that being pushed by Gen Zers and millennials, right? Gen Zers and millennials don't really have an interest in owning their home. Why? Because they live in a gig economy. They don't work for Kodak or Xerox for their entire lives. Today they're in Savannah. Tomorrow they're in Salt Lake. The next day they're in Singapore. They don't want to be saddled with hard assets. They grew up, even, my wife today, who's certainly, don't tell her, she's not a millennial anymore. If there's a big event and a wedding, she doesn't want to spend $2,000 on a gown. She goes to rent the runway, she rents it, and she returns it. Think of how many subscription models we are all accustomed to, and Gen Zers and millennials view housing like a subscription model. I'll subscribe for a year or 2 years, and then if I like it, I'll stay, and if not, I'll change it like I change my t-shirts. Now you have folks with young families that want to be homeowners, that can't afford to be homeowners. Why? Cost of housing's up like 50% over the last 10, 15 years, but wages aren't. Interest rates are unprecedented. Starter homes where you would buy from those baby boomers that are retiring and moving to Florida aren't going on the market because baby boomers don't want to give up on those 3.5% mortgage rates, right? So on top of that, the great financial crisis essentially kneecapped the home builders, and we are only now starting to build at the same levels that we were building in the early 2000s. We've got housing stock that is old. We're not supposed to be living in single-family homes that were built in 1958. I just bought one 2 weeks ago. We're not supposed to. Housing's not supposed to last that long. Then you throw on some storms. We haven't had any weather in Connecticut, right, over the last few minutes. Floods, fires, tornadoes, hurricanes. All of this means we do not have enough housing in this country, right? We, by some estimates, we're short 5 million housing units, whether you're talking about manufactured housing, affordable housing, single-family homes, luxury homes, apartments. There is not enough housing in this country. And in a normal environment, we're building about 300,000 units per year. Hopefully, I've just touched upon momentarily why we feel so bullish on rental housing and the need for rental housing in the immediate future. So what we are doing in this fund, Griffin Capital Development Partners Fund 3, we do opportunity zone funds, we do 1031 exchanges, and this one is what we use to help people lower the tax liability from executing a Roth conversion so that it's not as painful. Because we all know paying taxes today is painful, unless you realize that you're going to be paying a lot more taxes in the future. So this fund raises equity to build 200 to 400 unit multi-family communities in high growth markets, right? Those markets that we're seeing our friends, family, neighbors moving to. Those states that are seeing an influx in the number of members in the House of Representatives that they have, that are seeing an influx in new population, new employers, GDP. You know, the New York Stock Exchange is talking about moving to Houston, right? You're seeing this massive migration south and west in this country. Here are some of those units, right? Like some of those points. We've got massive lack of housing. We've got higher than most of us have seen in our lifetimes interest rates on or mortgage rates. We're seeing lack of affordability. When I bought my apartment in 2006 in New York City, the average first-time home buyer was 30 years old in the United States. Anybody guess what the average first-time home buyer is in the United States today? It's 40. So average person graduates college at 21. They have to work for 19 years before they can buy their first home. It's bonkers. That average first-time home buyer age in New York and California is 50. So we are feeling very, very bullish on this opportunity. Let's talk about how we do this, right? Hopefully I've made this is an example of the first property, the first project that we're building in this. But let's talk for a second about how are we pulling this off? Anybody ever go to a department store or like a Walmart and buy a gift card? Okay. If I go into Walmart now and I put $100 on a gift card, and then I drive to the gas station and I realize that I left my wallet at home and I need to go to this gentleman over here, and I say, I have $100 in this Walmart card, and I prove to you on the app that there really is $100. Are you going to give me $100 for it? Probably not. Even though 10 minutes ago, I put $100 on the card. There's $100 of value. No one is giving me $100 for that, right? Why? Because you want a discount. Why do you want a discount? You want a discount because you can't readily market that Walmart card, right? It's not like cash. So in the United States government, we have this, or in the tax code, we have this concept called a discount due to lack of marketability. If there's any business owners in this room, when you at some point in your life are probably going to do a valuation on your business, because if God forbid something happens to you, your family has to pay taxes. Any Yellowstone fans in the room? Okay, remember when he passes and it's like the taxation, like the fear of how is the family going to pay for taxes? You need to fire sale that at a discount to create the taxes. So the IRS says, you know, we don't want to hose you too bad. So what we're going to do is we're going to let you pay less, your taxes on a discounted value, right? Now imagine that you own a limited partnership interest in a illiquid investment. That one, it's not liquid, so it gets a discount, and you're just a limited partner. You're not the controlling partner, so you also get a discount for lack of control. So what we do is we go to an independent third party. They come up with a valuation to the shares so that if I need to sell my share to this gentleman right over here, what is the fair price due to the lack of marketability, lack of control? And we take that appraisal, and where do we have our IRAs here? At NFS or Pershing? Pershing. I go to my IRA at Pershing. I go to Pershing. I send them the appraisal, right? You invest $100,000 in your traditional IRA. I send the appraisal. The value drops to $65,000. You're like, what? Charles, I just gave you $100,000 and you managed to lower it to $65,000. It's on paper, right? Because what happens? Then you tell Pershing, I want to do a Roth conversion. And instead of sending you a 1099 for $100,000, they're sending you a 1099 for $65,000. Still got to pay taxes, but you're paying 35% less taxes. We're taking that $100,000 and we're investing in building it, and we want to turn it into $150,000. So that once we're done, you should be ending up in your Roth account with $150,000. So you've got the growth, you're done with taxation, and then you can go back and you can sit in cash, you can do stocks, you can do whatever you want. So I think I'm pretty much around my time limitation. Hopefully, I made talking about taxes on a Friday night somewhat appetizing, I hope. And for this, I would say, again, thank you very much. I'm trying to buy Charles time to decide if he wants to do the next. Charles, do you want to say something else, or do I pass on the baton? So with that, folks, I thank you all for your attention. I'll be around, happy to talk to anyone. Enjoy. And Charles, thank you for the invitation.